Hello, welcome back once again. Nice to see everyone. This is Si Wing Yi, and today is the December 29th, 2022. This could be my last video for the year, which is 2 days away from December 31st, 2022. And Merry Christmas and Happy Holidays, and hopefully your 2023 New Year real estate housing resolution will be a positive one because, in my opinion, there will be a lot of opportunities out there, regardless of all the doom and gloom and all the sky is falling negative headlines you've all been experiencing. So I ask all of you take a step back and just filter all those inaccurate, misleading data out there and learn, be educated, be informed, whether you are a primary home buyer or a real estate investor alike. Uh, there's a lot of opportunities, and when there's a crisis, there are opportunities. So you got to have a positive attitude and learn from the most ethical data consultants around real estate to give you some honest information and trends, as opposed to subject yourself to all those fear porn negative headlines out there, and there are plenty of them of your other YouTubers that are very, very clickbait just to entice you to subscribe to their channels so they could sell whatever product they're trying to sell you. Anyway, so I got a lot of things to cover. So the first thing I'm going to do is share my screen, and I'm going to cover a article that came out from National Association of Realtors yesterday, which is December 28th. And the title is Pending Home Sales Slid 4% in November. Oh, by the way, I have several resources I'm going to share with you today. I'm going to go over the Mortgage News Daily to go over the mortgage rates and situations. And also, I'm going to go over the Redfin year-end big picture analysis of all the trends. And also, I'm going to share with you, as always, my personal opinions about whatever I deem is I need to talk about. Once again, I've been a real estate investor for more than 30 years, and I have assisted thousands of real estate investors from all over the country to buy rental properties in many markets, many cash flow markets, many very affordable entry-level homes, and match them up with renters so investors can scale their real estate portfolio and achieve cash flow appreciation and all those wealth building attractive rates that are associated with owning real estate properties. All right, so homeowners alike, you can also see value. We see value from our my videos and 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 take advantage of becoming a homeowner, which is the key to the American dream. So without further ado, a lot of things to cover. Sorry it took so long to do this high-level introduction. So according to NAR, December 28th, pending home sales slid for the sixth consecutive month in November, and pending home sales recorded the second lowest monthly reading in 20 years as the interest rates, which climbed at one of the fastest paces on record this year, drastically cut into the number of contract signings to buy a home, said NAR chief economist Lawrence Yun. He further stated, falling home sales and construction have hurt broader economic activity. All right, and the pending home sales index, the PHSI, is the index that NAR uses, and their index are based on the index of 100, which is equal to the level of contract activity in 2001. So it's a 20-year tracking methodology. However, no surprise, the year-to-date November 2022, the pending home sales index with the NAR has fell 4%, to 73.9 year over year, November 2022. So yeah, and also another highlight which I like to talk about, which is to me the biggest takeaway for me on this particular article, put up by NAR, is the Lawrence Yun said, with mortgage rates falling throughout December 2022, home buying activity should inevitably rebound in the coming months and help economic growth. Now, let me, it's sort of a general broad statement. We have seen mortgage interest rate slightly decreased from the peak of this October, which is around almost 7.5% 30-year fixed rate mortgage. It has gone down to as low as 6.3% recently, a few days ago actually, but has now picked up just a little bit to the higher sixes. But I will share that with the mortgage news daily momentarily on that particular website. So what Lawrence Yun is saying that I'm taking he's implying that the mortgage rate might go even lower as we head towards the first and second quarter of 2023. In fact, I did a video with the NAR. If you search my YouTube channel, a few days ago, I did a video that Lawrence Yun and NAR, they're predicting the mortgage rate sometime 2023 to be around either from 5.5% to 6%, around that range. So they're very, very optimistic. Who knows? So based on that projection by NAR, Lawrence Yun have a very, very positive message. He said the buying activity should pick up sometime in 2023, and with the anticipation that the inflation will be subsiding and the Federal Reserve will further reduce the interest rate, especially if the recession were to occur in 2023. You would expect that the Federal Reserve will lower the interest rate to stimulate the economy back to a normal level if the recession are prevalent. We don't know. Only time will tell. So with that in mind, let me get back to the article here. Let me see what else. This is sort of a short article by the NAR. And in terms of the nationwide region, the pending home sales regional breakdown, the Northeast, the PHSI, which is again pending home sales index, is slip 7.9% from last month to 63.3, which is pretty low. Northeast section of the U.S., a drop of 34.9% from year over year from November 2021. The Midwest index has decreased only 6.6% to 77.8, which is higher PHSI index than the Northeast. So the Midwest is doing pretty good. So the South index retracted 2.3 to 88.5, which is even better. The South the part of the U.S. is doing well. To me, not surprising because I'm very bullish in the southern and southeast portion of the U.S. For those of you who watched my previous video, you will know why. Because there's partly mainly because of the home affordability in the south and southeast, and being in the Sun Belt, very, very affordable and fast growing. That's why a lot of home buyers and a lot of real estate investors are pulling the trigger in the south and southeast, not only in the past, but moving forward into the future as well. So no surprise, the West index dropped by almost 1% in November to 55.1%, which is the lowest index comparing to the other regions of the U.S. And so the West index has PHSI index has retreated to a low of 45.7% from year over year last year. And the Midwest region, which relatively affordable home prices, not relatively affordable home prices, very affordable home prices. And I warn you, the Midwest is up and coming. right? The Midwest region of the U.S. has the lowest home price increases in the past few years, unlike the Western region and the South and Southeast. So, so it's a very healthy market. I mean, it's a boring market. It's a healthy real estate market in the Midwest region, and you might be surprised that more and more people may migrate migration back to the Midwest because of the rental prices, and home is very very cheap, relatively speaking, compared to especially the Western region of the U.S. Especially California, where I live here in San Francisco Bay Area for the past 30 years. So I know, especially what's going on in California and the Western region with the largest decline in activities, needless to say. And all right, so with that in mind, biggest takeaway again, NAR, National Association of Realtors, Ms. Lawrence Yun, feel very positive relative to the future of the housing market for the foreseeable future. So, which is a good sign, right? It's not all doom and gloom. It's like some experts predict. So it's for sure it's not going to be a crash. The interest rate right now has creeped up to around 6.55%, slightly higher than the previous last few days. 29 December, the 30-year fixed rate is 6.55%, which is 1 basis point higher than the past few days. And also, I'm going to share with you the historical 30-year fixed rate mortgage. I know a lot of people are just freaked out about this this year's interest rate. But if you, on historical basis, I mean, you look at 40 years ago, back in 1980 something, the mortgage fixed rate was around almost 18%. And then only like in the past 20 years, around here, the mark was you see interest rate within 6% or less. So the last 20 years, we are enjoying some amazing, very very low interest rate, mortgage rate, and people are spoiled by it. But prior to 2020, prior to 2000, 20 years ago, look at that, 18% mortgage rate back in the early 90s. Then the mid 80s, we have like 10%, 11%. All right, then the 1990s, 8.5%. Then you have even the late 1990s is at 8%. So only the year 2000, when the interest rate has gradually decreased drastically. So just so you know, I mean, don't get spoiled by it. So I think the new normal is set that in the next few years, at least, no one can predict the future, but I have to believe that you should settle in between 5.5% to 6% mortgage interest rate for the next few years. So that's the expectation for you guys out there, whether you're a home buyer or a real estate investor. So welcome to the new normal, right? So that's how the world works in these days.